Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. Are you tired of the stock market roller coaster up and down? Well, what if I tell you there is an investment option which has consistently been delivering greater returns than the stock market and at lesser the risk? Does it sound too good to be true? Well, I'm talking about HDFC Top 100 Fund. In this video, let us dive deep into the strategies and details of this fund, which has been paddling portfolios and giving consistent returns for more than 2 decades now. To give you a perspective into the kind of performance of HDFC Mutual Fund, well, Nifty 100 index has been giving a return of nearly 5.85% CAGR for the last 5 years. But our star of today's video, HDFC 100 Top 100 Fund, has been consistently giving a CAGR return of 18.33% since inception. It is beating the market at its own game. Why is it necessary to talk about this fund? Well, it is not just about returns. What this fund helps you to do is it helps you to invest your money in the top 100 companies of the Indian stock market. What this means is your risk is scattered across the portfolio and you get a chance to invest your money, become part of the creme de la creme, the cream of the corporate crop. So the potential of earning higher returns by along with stability of the large cap companies is what this fund helps you achieve. So let us dive in and unpack the powerhouse that is the HDFC Top 100 Fund. Why I thought about making this video is recently HDFC Mutual Fund announced that the it is going to rename HDFC Top 100 Fund to HDFC Large Cap Fund. And when I was reading this news, it dawned upon me that as investors, this could be an enviable investment option for people who do not like the ups and downs of the stock market or think that it is too risky but still want to earn higher returns than what your traditional investment options give. So that is why I thought of making this video today. To start with, let us go into a little history and details of the fund. Well, this fund has been in operation for the last 27 years. It was launched on 11th of October 1996. It is predominantly a large cap fund and one of the oldest large cap funds in the country. Again, to give you a perspective as to why I think it is necessary for you to go through this video and learn more about this fund. See, if you would have started an SIP of 3000 rupees in this fund at the time of inception, the value of that investment that you would have made over a period of time, which is roughly 9,72,000 rupees that you would have invested over the period of time through SIP. Now, the value of that 9,72,000 rupees today, after 27 years, would have been a staggering 2.5 crore rupees. The current assets under management of this fund stand at 36,587 crore rupees at the end of November 2024. Its expense ratio is 1.6%. Currently, the fund manager for these funds are Rahul Baijal and Dhruv Muchal. But for the longest period of time since the inception of this fund, for 19 long years, till 2022, the fund was managed by the legendary Prashant Jain, who was the CIO, Chief Investment Officer of HDFC Mutual Funds. It was in 2022 that Prashant Jain parted ways with HDFC AMC to set up his own boutique investment company, which goes by the name 3P Investment Managers. So now the fund is being held by Rahul Baijal, who has stepped in the shoes of Prashant Jain. Next, let us look at the investment strategy followed by the fund. Well, the fund follows a growth and value investing style of strategy. What that basically means is it looks for companies which are trading below their intrinsic value. So, companies with low PE ratio, low PB ratio, high dividend yield, strong balance sheet positions are potential investments for this fund. Also, it is a large cap fund, so it predominantly invests in the top 100 companies in the market by way of market capitalization. Some of the noteworthy investments of this fund are it has invested nearly 10% in ICICI Bank and HDFC Bank, almost 6% in L&T, 5.5% in NTPC, and again 5.5% roughly in Bharti Airtel. Some of the sectors in which allocation has been done by the fund: financial sector has the highest allocation with roughly 32.5% of the AUM allocated in this sector, followed by energy sector where 13.68% of the money has been invested. Then technology, consumer staples, healthcare are some of the major sectors in their portfolio. The fund follows a bottoms up approach of picking stocks. Now, what this means is it de emphasizes the macroeconomic parameters, which means it does not completely ignore them, but it stresses more importance on individual company and its performance. From picking up individual companies, then it goes upwards to see the industry in which the company operates it, and then the macroeconomic factors which have the potential of affecting that company. So basically a bottoms up approach by looking at individual companies first and then taking a broader view later on. They have a three pronged approach to stock selection. Firstly, looking at the business model, the strength of the business model, then the experience and quality of the management team, and lastly, the financial matrices like return on investment, return on capital employed, cash flows, etc. So, these are basically the steps that they follow to pick up stocks. Now, let us look at the performance of this fund vis a vis its peers in the market as well as the market benchmark. If we look at this fund category, large cap funds, in fact, all fund houses have their own large cap schemes. Now, some prominent schemes in this category are ICICI Blue Chip Fund, SBI Blue Chip Fund, Nippon India Large Cap Fund, DSP Top 100 Fund, just to name a few. Comparing the performance of this fund vis-a-vis its peers, ICICI Blue Chip Fund is far ahead in terms of AUM as well as returns in this category. Now, where the AUM of HDFC Top 100 Fund stands at 36,000 crores, the AUM of ICICI Blue Chip Fund has touched a huge 65,000 crores. The returns, if you compare the returns of ICICI Blue Chip Fund stand at 21, roughly 21.8% for the last 3 years as of December 2024. Now, for the same period, if you compare the return of HDFC Top 100 Fund, it stands at 18.97. The category average is 15.56. The fund that comes closest to HDFC Top 100 Fund is the Nippon India Large Cap Fund, which has a similar AUM and has similar returns as well. The If we check the market benchmark return, the return for Nifty 100 index in for the 3 years as of December 2024 stood at 14.21. So this fund has given 18.97% returns in comparison to the 14.21% return that the Nifty 100 benchmark has given. The idea of doing this video was not to sell you a particular scheme of HDFC AMC, but was to focus or turn your attention to this category of investment. The large cap fund category offers you stability at lower risk and higher returns. So, whether it be investing in ICICI Blue Chip Fund or Nippon India Large Cap Fund or HDFC Top 100 Fund, what these funds offer you is a chance to become part of the top tier of the Indian industry, also earn better returns as these funds have consistently beaten the market indices, and with risk that is diversified across the portfolio. So as a long term investor, ignoring such funds is not a good investment idea. Again, to end this video, always check whether a particular investment is in line with your financial goals. Seek financial advice if you are unsure about any particular investment. Ask me questions if you have any doubts, and I will be happy to help you. I hope this video has added value to your investing decisions, and if so, please like, share, and subscribe to our channel and help us grow our community. Until next time, stay safe. Goodbye.